Hi everyone, Drini here, and welcome to my channel. So as you can see, I'm still here, trapped in the depths of the bear market, trying to see if there's any hope for escape. Kidding aside though, if you follow certain news outlets, certain analysts, especially on Twitter, you would start to see that a lot of people are calling for lower prices. Bitcoin to 9,000, Bitcoin to 10,000, Bitcoin to 3,000, Bitcoin to zero, of course, if you follow Peter Schiff. Given the very negative sentiment and given all of the data that they present to the table, as an investor, let's dive into the charts just to see if there's merit to whatever they're talking about. And more importantly though, what do you do when it comes to this situation where it feels like you're a fool if you enter the market? And let's dive in. So what I have here is I have the chart of Bitcoin on a weekly time frame, and if you notice, this particular weekly candle right here is now very similar to the capitulation candles of the past. So for example, this particular candle has a 33% or 34% drawdown on a week, very similar to this particular capitulation candle of 2018, which is also a 37% drawdown. This particular March 2020 COVID capitulation was actually much larger, but then again, this is a black swan event. So it fell all the way to 50%, but when you look at when the candle closed instead of when the candle opened, it's actually in line with some of the other crypto capitulations of the past. When you also go back to capitulation candles back in 2013, 2014, this particular candle was also a 37% or a 30-ish percent candle. This particular candle was also a 30+% capitulation to the downside. So remember when I told everyone here that capitulation candles like this are pretty much prime opportunities to either DCA or buy some, because typically after this capitulation, what follows then is an accumulation range, something like this. So remember what we were talking about earlier before we showed the charts. People are now calling for 9,000, 10,000 Bitcoin, 3,000 Bitcoin, which is around here, because of certain whatever charts are out there, whether it's open interest on futures, whether it's key support structures, etc., etc. Now, while the stance that we have is anything can happen, historically though, it's very important to understand the 200 and the 300 MA are pretty much strong support structures that have withstood the test of time. So history is actually on our side here when we have situations such as this.
But Rini, what about the fact that we have already broken through the previous cycle's all-time high that hasn't happened before?
So you're right. We are in a situation where something has not happened before, quote unquote. But then again, when you look at Bitcoin's price action over the years, and this is once again borrowing Benjamin Cohen's analysis, the top of the cycle as compared to the bottom of the next cycle, for example, has been shrinking in the first place. So this one was a 300% difference between the top right here and the bottom right here. This particular top right here versus the March capitulation bottoms have been 147%. So from a trending standpoint, we are really bound to have a situation where we will be testing the all-time high. This is because of diminishing returns. It was bound to happen that eventually, when you have market caps that keep going higher, it's very hard to push price as high as we need to be. Now, because a lot of you who watch my videos are not traders and you are investors, what do you do in this type of situation? Because at the end of the day, yes, people have been calling for much lower prices because we got here too early, for example. But it is very important to understand that during the March capitulation, when we reached the 3,000 level, a lot of people were calling for 2,000, 1,000 Bitcoin. When we reached this particular level of 3,000 right here, a lot of people were calling for Bitcoin to go down to zero. This particular trend where you have a major capitulation to the downside and everyone wants to keep having price predictions down is also something that we have to account for as we invest in any particular asset. And if you believe that price goes to particular levels, then sometimes you could be there stuck waiting forever while the rest of the market sort of capitulates right here, or the accumulation range starts right here with wicks to the downside every now and then, for example, before we eventually start finding a base that we can work on moving forward. So as an investor, what is an appropriate strategy moving forward? Now, I can't tell you what to do, of course, because this video is not financial advice, but I will tell you how I navigate through markets like this The first one, of course, is from an investor standpoint. Because we don't know where the bottom will be, then there's only really one solution here. If we're not trading, we are investing. And if we are investing, the best way is really to dollar cost average. Now, dollar cost averaging during a bear market will feel really, really weird. People will laugh at you. The market will laugh at you because it will keep going down. When you decide to DCA, suddenly it goes down a little bit more. The market has a way of making you feel very, very stupid when you start to DCA accordingly. That is a very normal emotion to have. So the first thing that you need to have is you need to have a point of view and an objective on how you want this to play out. So the point of view, for example, that I have is this one is a historical floor. So the start of my DCA starts from this particular level right here, and even in here, this particular level right here. If you've been watching some of our videos of the past, you know that we have identified that this range as pretty much a risk-off zone because the risk is so low as compared to the rewards to the upside that the start of the DCA has already happened for me. What is my objective though? My objective though is wealth accumulation over a span of a couple of years, meaning even though price goes to our supposed 10K, even though price goes to our supposed 6K or 3K or whatever price levels that the bears have identified, then we just continue to DCA accordingly. Because the belief that we have is regardless of where Bitcoin ends up like this, whatever Bitcoin you have accumulated over time will not be the final price of Bitcoin. The assumption that we have, of course, is we eventually go out of this particular bear market and the price targets that we have to the upside are much, much, much bigger than the downside embarrassment that we will have when we start putting in funds when it comes to Bitcoin. Bitcoin, if it bottoms out now, the 1618 extension is currently at $160,000 during the next run. If it goes down to our supposed 10K, which we will continue to DCA into, the 1618 changes to around $223,000. If it goes even lower, for example, if it goes back to 6K or whatever they were saying, then the 1618 extension goes all the way to 300,000. So it's very important to understand that when you have a longer time frame to account for and you know that Bitcoin will not go away, I would rather suffer all of the embarrassment in the world where people are calling me names or derogatory names because I keep going down as I invest. That is because my upside targets are way, way, way higher than the embarrassment that we will achieve as we continue to stack sats. I am also applying a risk threshold to my investment. If we know that we've already blasted past this 200 MA right here of around $22,000 right here, this is actually one of my risk thresholds. So for those of you who haven't been watching my videos in the past, a risk threshold is a price where once you are above this particular threshold, then you stop investing accordingly. That is because the downside risk is much, much, much higher now than the upside gains that you can have. So because we are in a bear market, then my risk threshold is this 200 MA. As long as we are below here, it doesn't matter where we go, then I continue to DCA accordingly. However, once it breaches the 200 MA once again, because the 200 MA can do something like this, then I stop investing and enjoy the ride. So I hope this helps and you're able to apply these principles into Bitcoin or whatever other solid project that you are investing in. Best of luck out there, and we continue to trudge through the dungeon that is the bear market.